In December of 2018, the federal government of the United States of America, the most powerful nation in the world, shut down. With this shutdown, the lives of over 800,000 federal workers were affected. Their lives were affected. Why? Because they were dependent on the next paycheck to take care of their mortgage, their student loans, their car loans, and to put food on the table for their loved ones. Here is where we had some of the cream of the crop, highly educated people working for the federal government who were caught between the rock and the hard place, and that is becoming cash strapped. With the realization of this, it's further reinforced in my mind the need to amplify awareness for financial literacy, for financial intelligence, for financial education. And having said that, it further gives global branding and marketing the momentum, the impetus to become a stronger voice in raising national and international people's awareness about financial intelligence. In today's broadcast, I want to talk about something that we call passive income cash flow, and I will be giving you some practical systems that you can begin to start to look at in terms of investing in and building equity and also building cash flow portfolio. But just before I get into today's lesson, permit me to tell you a little bit about global branding and marketing. Our mission at Global Branding and Marketing is to position our clients, employees, and strategic partners to understand, create, and leverage passive income cash flow, build multiple streams of income, leverage smart investment strategies in order to build generational wealth. That responsibility is a pretty huge one. First of all, is to help people to understand passive income cash flow. What is passive income cash flow? We will look at that today. Our mission moving forward also is to help people to understand what is multiple streams of income, what is smart investment strategies, and how to build generational wealth. We have too much of people in the world, smart people, bright people, highly educated people, who continue to go paycheck to paycheck. In today's broadcast, I will introduce to you a portfolio, and that portfolio is what we call a REIT. In the United States of America, in the year 1960, Congress passed into law the principles, the guide, the system that literally manages how a REIT may manage itself. The REIT has to also be registered with the SEC, which is the Security Exchange Commission, that literally manage this body and regulate this body, monitor what this body is doing, so as to ensure that those persons who are investing in the REIT, their investments are safe and protected. And because of the safeness of this portfolio, I'm going to talk about it because it's a unique way in you developing your IRA, which is your individual retirement account that gives you a decent amount of cash flow. But let me start by explaining to you what is a REIT. And it's spelled, the acronym is REIT, and that stands for Real Estate Investment Trust. What is a real estate investment trust? A real estate investment trust is a body just like the S&P 500, similar to the 401k, similar to Dow, that allows you to invest in the stock exchange market. Some of these entities may be publicly traded company, non-publicly traded company, listed but not public, They may also be private companies. Now, the REIT also represents two particular portfolio. There's one that we call the equity REIT and the mortgage REIT. And it's important for you to understand this. What are some of the platforms under the equity REIT? There's something that we call retail REIT. What exactly is the retail REIT? There's something else that we call the residential REIT, the office REIT, and the healthcare REIT. Now, each one of these REITs are a real estate portfolio. And what these REIT companies do, they buy equity, whether it's retail equity, big supermarkets, supermall, they purchase these entities. And they may or may not have an invested interest, direct or indirect, meaning that they may own the asset, but what they do, they find persons who will rent space, retail space, in those outlets from which they generate their monies from. I'll talk a lot bit more just now about how those monies are distributed. There's also the residential REIT, and here is where they own residential estate, either houses or duplex or fourplex or eightplex. They own residential REITs. And in owning those residential REITs, they are collecting monthly income, and they're also getting annual appreciation. Later on, we'll go into that lesson. Today is just to help you to understand REIT, how REIT works, and why perhaps it's a safe area for you to start thinking how to invest your money. There's also what we call the office REIT, and here is where the REIT company itself builds office space or acquire office space, which in turn they rent out to corporate communities. And when you go to the United States of America and you walk around places like Manhattan, you perhaps will see a lot of these institutions, very big, tall, massive buildings that are pure office space. These are some examples of what a REIT represents. But let me say this. There's what we call the equity REIT and the mortgage REIT. And there's a distinction between the equity REIT and the mortgage REIT. For instance, again, with the mortgage REIT is where the managers of that particular REIT portfolio, instead of taking their liquid cash to acquire asset, performing asset, capital gain asset, they take the liquid cash and they lend it out for persons to acquire housing. That's what we call a mortgage loan. And how it works. In terms of the equity asset, the REIT portfolio generate its income from real estate rental and real estate appreciation. On the other side, where you have the mortgage REIT, the REIT portfolio manager gains their income from this mortgage portfolio by charging interest on the sum allocated for real estate development. Important facts for you to know, because here is where you are literally seeing where the monies are going, how the monies are being invested, and you can make informed and educated decision. Unlike in some other market where you're doing front-end loaded investment and you don't have a single idea in terms of what's happening at the back end. This provides you to see both the front end and the back end investment opportunity, which minimize the risk involved in investing and gives you greater assurance that at the end of the day, you're going to be getting dividends. Something that I must point out here also is that investing in REIT, which is Real Estate Investment Trust, some of these portfolios, you need to have that kind of information. At the right time, we're going to bring you this kind of information. It pays you dividends on a monthly basis, a quarterly basis, a half-year basis, or a yearly basis. Later on, we'll talk about that, and we'll talk about compounding your interest for greater capital gain and cash flow maximization. We'll look at that. Something that I must point out, however, is that in investing in REIT, they have advantages and some disadvantages. And I think that you should have this kind of information. One, by law, the REIT managers have to distribute 90% of the net income generated by that REIT portfolio. That is excellent news for those who are investing in these particular portfolios. Excellent news, 90%. So it simply means that the REIT portfolio manager can only reinvest 10% of the profits of that REIT portfolio on an annual basis, because 90% is redistributed out to their investors, which makes it more attractive to investors to want to invest in these portfolios. One of the disadvantages also is that because of the high sum that is redistributed out to investors, it simply means that now the state tax you based on your income tax bracket, all right, on that. So these are things that I think it's important for you to know. The beauty about all of this is that it is a safe and solid platform to invest in. This, of course, is not the only platform to invest in, and I trust that you can start to research this for yourself, and so you could raise your financial IQ in terms of practical steps that you can take to start investing. Now, there's a lot of discussion in terms of whether owning REIT and owning real estate, which one has greater advantage. Now, the thing about it is that when you are an investor in a REIT portfolio, it simply means that you own part of the asset without owning the physical asset. And just let me talk a little bit about that. When you own the physical real estate as an investor, it simply means that you have to do the day-to-day work and runnings of managing that real estate portfolio in the absence that you don't have a manager to manage that estate for you. So this simply means that if you have a leaking on the roof, you have to attend to that. If you have something with the plumbing that has to be fixed, you have to attend that. If you have challenge with tenants, you have to intervene to address that. And very often, sometimes you get calls all manner of night, the day or the night. And these things can certainly pose a challenge to you. On the flip side of this, when you invest in REIT, you own the very asset without all of the responsibility of managing that portfolio. So these are important investment decisions for you to make. Now, the question that I've thrown out earlier on is whether having the real estate is better or owning the REIT is better. This is a highly subjective question. And it is subjective because of the fact if you have $10 invested in a REIT portfolio, of course the dividend that you're going to gain, if even it's 10% dividend yield on an annual basis, it simply means you're going to get $10. But if you have $100,000 invested in a REIT, it now means that you're going to get $10,000 if the yield is 10% per annum. Now, if you have $1 million invested in a REIT, It simply means that 10% of that $1 million is going to be $100,000. And $100,000 to most American earning passively is an earn to keep, is an earn worth earning because it can cover a lot of your overheads and provide you with a reasonable lifestyle. Now, hear this. With $1 million invested in a REIT and an annual dividend or yield of 10% will give you $100,000. In some parts of the Caribbean, this is $20 million. And $20 million can provide you with a really high class luxury lifestyle. Because of the fact that if you just spend $1 million a month, $1 million a month, and that's a lot of money. The average person don't earn that. But this portfolio provide you with that opportunity to earn this on a monthly basis. If even you spend $1 million a month for 12 months, it still leaves you back with $8 million to reinvest however you want to invest. The beauty about all of this is that investing in the REIT, it pays you. And it's still the minimum balance that you would have deposited for your investment maintains, and it continues to give you dividends. And if that portfolio, when those portfolio appreciates, you also benefit from that without the responsibility. Now I make the argument because the advantage between owning a REIT and owning real estate is subjective. It largely depends on how much invested interest and investment that you're making into those REIT. I can give you some example where the earning of $20 million from a REIT portfolio is much more significant in many cases in owning real estate and managing real estate. And yes, there may be cases where owning the real estate gives you greater asset. But these are things that we will get into later on to help the public to be able to make smart investment decision. At Global Branding and Marketing, this is truly our mission to transfer this body of knowledge to you, to help you to make informed and educated decision as to how you can now put money to work for you as against only working for money. There's no harm in working for money, but there should be also no harm in knowing how to put money to work for you in a smart and strategic way. So again, I trust that today's lesson, you would have learned a lot from it. You learn about what is a REIT. You learn of the various types of REIT. You learn about what is equity REIT. You learn about what is a mortgage REIT. You learn that it was established in 1960, and that was established by the Congress in the United States of America. You also learn that 90% of all of the net income must be transferred back to investors. You also learn that you have to pay tax on this, and in most cases the tax are not deferred. Those details we'll go into it later on, but it gives you a decent amount of money. The beauty that I like about REIT also, just to add to it, is that if you make solid investment, if you're able to raise your capital gain, invest your capital gain into these portfolio can literally give you an opportunity to retire early in life, which means you can use your time now to better invest in higher education, develop yourself, because the greatest asset that you have is not your money, is you. All right, because you may have money, but you do not know how to manage your money, you're going to lose all that money. But when you have the time to invest in yourself, you're putting your time, talent, and resources into developing you, you're making yourself more equipped to manage yourself and to manage all the portfolios around you. And this form of investment gives you the time to be able to do this for yourself. In the event that you're now joining me, my name is Gary Thompson, I'm a business development consultant by profession. I'm a humanitarian by nature, and I'm the author of several books, including Billionaire Codes, which I'm the best-selling author for this book, and I'm also the author of Manager's Toolkit. And Manager's Toolkit is one of my most recent books, and this book also will tell you so much about building a global brand. And in building a global brand, it also tells you a lot about managing money and financial intelligence. There's so much of information available out there, and I want to encourage you because our mission is to ensure that we can transfer this body of knowledge to you, and not only transfer this body of knowledge to you, but to ensure that you can apply this body of knowledge to increase your cash flow. So I want to encourage you to like this podcast, share this podcast, subscribe to us so you can get regular update as we produce and broadcast these programs. It has certainly been a pleasure being with you today. And in closing, I want to say REIT is one portfolio. Later on, I will tell you about the S&P 500. And what is the S&P 500? The S&P 500 is an American-based index fund, and it manages over 500 of the biggest companies that are traded in the stock exchange market in the United States of America. I will also be telling you a lot about the Vanguard Real Estate. They manage a portfolio of about 190 REITs, which is excellent portfolio for you to learn. You'll learn about the Montreal Bank that has an excellent history. In over 100 years, they have never failed to pay dividend to their stockholders, to their shareholders. There's a lot of these portfolios that moving forward, I will spend time to bring you more information about them, to start getting and giving you the encouragement to start getting your feet wet, to start making some passive income. Passive income is when you put your money out there to work for you, and your money is paying you monthly, quarterly, half yearly, yearly, and you don't really have to do all of the work for it. All right, so if you know how to work for money, it is time that you start learning how to put your money to work for you and position yourself to cash flow maximize. This program also comes to you with the compliments of the Mega Money brand. The Mega Money brand is going to be sharing with you information of what we call the 4 highways to mega money. The truth about it, if you really want to know how to cash flow, there's only 4 highways to mega money. I'm going to give you one today. Over the next 4 broadcasts, I'm going to give you another one. There's something that we call building and leveraging diversified land asset acquisition. A long term, but just a simple breakdown. It's largely about owning land, managing land, flipping land. It's largely about having real estate and diversified portfolio in real estate. It's largely about understanding what is commodity investment, because commodity investment also has to do with land. We will do some deep dive into these portfolios to really help you to understand how to start making educated and informed financial decisions. My name again is Gary Thompson. I am a business development consultant by profession, humanitarian by nature, and I'm the best-selling author of Billionaire Codes, and my most recent book is Manager's Toolkit. See you in the next broadcast.